Yo, good morning, everybody. Let me throw something up real quick. Always got to put the disclaimer. But yeah, welcome. Good morning. Today should be a great day. We'll see, obviously. We are still in this range, but I do think that things should be nice. So, yesterday in my private group, I had an internet problem yesterday. I was going to go live with them in PM session. We did do some observations. I just wanted to point out some things that we were talking about and a target that I laid out for them and just show you guys what happened. So if you look closely here, you see that I have little eyeballs in here. Okay. And basically what price did from this level, which on this chart is here, basically shot up a little bit and then went right down to the exact level that I've mapped out, right? Pretty much to the tick, essentially. Maybe a couple ticks off. But the drop, obviously, it was later in the day, kind of slowly got there, but nonetheless, the overall target was there. So today, given what we see so far, it does seem like it's still very much interested in trying to get the rest of this gap. Now, why is this gap important? Right? Why is that something to even look at? Didn't we already leave it? Well, you have to consider what price does around these gaps. What defines a balanced price range? How do we know that a price range is balanced or a gap is balanced and shouldn't be traded back to or should be traded to because it's imbalanced? Well, as you could see, there's up to this point, not the whole gap, right? We already kind of balanced out the lower portion, the lower half exactly, right? The middle's right there. And notice where the body's closed in regards to that. So we wicked a little bit, right? We opened up, it was really far low. And then it continued to dive a little lower. It tagged or got close to tagging the projection from this high to that low. Okay. Pull that up real quick if you can't see it. Okay, you can see how it came really close to tagging that. And then of course the news of Trump basically slowing down or having a ceasefire or something like that, that was a positive event. Just like how with the tariffs last year, when I called the low of the year, I'm not saying this is the low of the year, but we kind of used a very similar news observation, real world analysis with the overall conditions of everything, and then we used things in the market, which was a yearly bullish order block. But in this case, it came right down into that, and it shot up. Okay, so do you see any sell side delivery from this price action here from the open beyond this point, right? Is there any sell side offered in there? I would say it's not, right? It clearly isn't. So I mapped this out yesterday in my private group, telling them for PM session, because we were up here and we had this left available. Everybody and their mama was thinking, okay, I'm going to buy because I missed out on this huge 800 point 15-minute candle. It was 800 points in 15 minutes. That should tell you the risk that's involved right now and why you shouldn't be over trading or over leveraging. But we need both sides of the market to be delivered for something to be classified as inefficient, and then it needs to push away. That's the last important factor. If it's just bouncing around, balancing a price range up and down, unless it breaks out and then starts to use that as either resistance and goes lower, or it breaks out to the buy side and then uses it as support to then go higher and as it pushes away. Unless it does one of those two things, things are not balanced, right? It's going to be used again. And then later on when it leaves it, it may use it again when it comes back eventually after it fulfills whatever liquidity it's trying to purge. Okay. But yeah, so in this case, there's no sell side offered in here. So when we're up here, I said, I don't necessarily trust it 100% that this displacement is going to, in fact, be something that's, worthwhile, really. Okay. Take that off. It's a little bit late for that one. So I wouldn't be surprised if this turns into a continued run, just to simply target the rest of the liquidity that's below this, but also the lack of sell side delivery. Okay. What's up, Fotis? What's up, DJ? I believe that's DJ. Yeah, hopefully that makes sense. And then, if price can get down there, we'll see what happens. If this is truly going to act like a shift in market structure from, say, this 4-hour chart here, because we did shift, it looks like it just simply went up here to tag this inefficiency, though. Ideally, this is what we want to see if it is going to continue to drop. It's okay if it wants to go up into a previous order block or a previous balanced price range, but it has to stop on a closing basis at the 50% from this low to that high once it breaks down, right? So this came up into here. In order for us to verify that we are now not going to go short anymore, price is going to have to essentially give us a failure swing in here and do what I call a type 2 dealing range. And then basically just leave this available. The problem with this delivery, though, and why it's not trustworthy, is because that gap was left around. It didn't have sell side delivery in there. So that's a problem, right? And you can kind of see that manifesting here and from the observations yesterday with my private group. You guys can kind of see, the validity, real time, and why certain displacements are not, they're not necessarily trustworthy. Okay, give me 1 second. I'm gonna run to the bathroom real quick. All right, I'm back. Had to go really quick. All right. So yeah, I wouldn't really doubt that they're going to continue to try to come and seek this until it gets fully traded to this point, which again, that's the upper portion of this little gap in here. Okay. So basically, the way you could look at this, all right, with this example, this is imbalanced. Well, technically, it's this now because we already offered down movement, up movement. But we'll just use the whole thing and paint this picture real quick. So the upper level is imbalanced, and then the discount level has already been fulfilled. Okay. So you could see it like this. So when it's like this, and you have like a huge displacement, it could end up becoming a problem down the line, especially if you have a displacement so early in the week on Monday. Going into Tuesday, you know, it may, before it is ready to go, it may look to try to come and sweep some of this out a little bit, right? And then once it hits this level down here, that's the 50% of the new week opening gap. If it holds that and then we end up getting price to come up here and it starts really showing support, leaving this like this gap available, and we start seeing change in state, order blocks, fair value gaps, PD arrays being inverted to the upside, wicks being respected when they're created and traded back down into them up to the 50%. You know, once we start seeing that type of stuff with the context of this being balanced, and then maybe DXY looks to continue to decline. DXY hit our target too from Sunday that we talked about. Wait, can you guys see that? Let me see. Yeah, right there. So yeah, we'll see what happens closer to this news event that's coming. It's going to be a very dynamic news environment. It's obviously an hour away, but you know, with the news being what it is, the fact that it's PMI, which is pretty dynamic, right? It's pretty dynamic depending on what the numbers are. Obviously, the numbers don't necessarily really matter, but obviously, if it's a positive number, it does lean a little bit more towards a more positive result. If you can couple that with what the chart's showing you, it becomes a lot more effective. But because that's the case, because we're in pre-market, because it's a split news, so one at 6:45, one at 7, PMI may, you know, whipsaw. It may pull people in. That may be actually what is used to come down and fulfill that lower or upper portion of this premium part of the new week opening gap. Let me see something real quick. Yeah, do you guys have any questions about anything as we walk forward? Remember, no question's stupid. No question is not worth asking. You guys can always ask anything. That's the whole purpose of why I go live. You know, I don't ever really even rewatch my own videos, because I'm definitely not someone that likes to just hear myself talk just because. I don't even really watch my own videos unless I'm, you know, trying to make them into other pieces of content. But I don't even do that a lot, you know. So, yeah, just if you guys have any questions as the call goes on, let me know. I know those of you in my private group are getting really good at that. So, and that's why you guys are starting to get results, and at least at a minimum, walking towards clarity. So yeah, I would not be surprised if we can get price to go down there. So that's what I'm gonna be banking on. So, and if you look at price right now, the setup that could get us there, we have a high, low, failure swing. This right here is a mitigation block. So if this is going to try to not come up here, we do have first presented fair value gap in here. When I'm on a larger time frame, the indicator pulls up other time frames, just imbalances. So I advise you to just take the levels that are shown here on the 1 minute for the overall first presented fair value gaps, because we don't look for that on the larger perspective. I'm sure this is fractal, right? I'm sure this has a fractal nature to it, but for what we do, to keep it simple, just go off of the 1 minute, because that's how it's taught. Let me see something. It's already doing it. If we zoom out a little bit, we could see, don't really have too many gaps to really go off of. We do have the continuous contract we could look at, which is finally, if I'm not mistaken, yeah, it finally fell in line with tagging this. Remember last week, this was not fulfilled yet. But again, we are inside of this quarterly fair value gap. So we got to see what happens, right? We just took out a very significant, or we have taken out this very significant liquidity pool, right? We can go up to the midpoint or a full closure. But if it's going to be a really, really bullish year, I mean, think about this too, right? Like last year, what happened? What do you see here? Right, you see a drop, hit the yearly order block, which again we called the low of the year. You can go back to January, February, and see. I think it was more. I think it was in March. But at the beginning, drop lower. So you think power 3. These are candles, are they not? If they're candles, they operate on open, high, low, close, power 3, accumulation, manipulation, distribution. So we had accumulation here for the first going into the second quarter. With the manipulation, that fulfilled a higher time frame PD array from the yearly view. Tariffs at that moment, just to understand the alignment, tariffs at that moment were taken off or minimized, and that was a positive event. And so as a result, it just rapidly ran through the year, through to the buy side for the next couple quarters. So again, if we come back over here, right, look and see January, February, March, April put us into this. And so accumulation, manipulation, distribution higher. So we can be looking at this year. Why is this important, right? We could look at this year in the last quarter, which was this. Yeah, it was this. Why don't we have our new quarterly candle? We're in a new quarter. Maybe it's just lagging out. But we could look at it in a very similar light, right? So start of the year, accumulation, manipulation, see where it would set up relative to what it is that we do. We got external taken, so it seeked internal, which is the whole purpose of what my narrative has been, to target the shorts before we look to try to buy. Plus seasonality is bearish for the most part around this time. So it just makes sense of this. And so now that we've tagged that, we got to determine, are we going to keep going, right? Or is it going to reach down a little further, go up to these timeframes that are a little bit higher? We've already hit that significant PD array. We do have liquidity down here that could get targeted, but that's assuming that this is going to go through. And if we don't get a quick reaction from this, just like how if we're on the 5 minute and we're looking for a fair value gap, we want to see it get left open up to the midpoint and then get displacement, preferably a change in state of delivery. And then we can kind of ride that wave, okay? So I want to see if that can happen here. We do have this wick. We do want to see how this is going to close. It's pretty solidly rejecting that area. So we're not necessarily done with trying to aim for shorts. That's going to be my main objective today until we see what happens in that new week opening gap. Right, that upper little piece I was talking about. So yeah, but if we get on that higher time frame at some point in the near future, price continues to respect the gap in there from the 3-month chart. We've been bearish all year so far. But if this reaction can lead to, like, this displacement, and then it fails to break this, and then we get more displacement, that, potentially eventually turns into multiple changes in state, or in particular, this daily bullish order block gets traded through and closed above. You notice how it didn't close above it yet? You notice how on the weekly perspective, it's got a lot of wicks being respected. Those are signatures, especially with order blocks and fair value gaps too, staying respected. Those are signatures that price is going to continue to go lower, or it should be considered until it changes state of delivery, right? Because it's a change in state when it breaks this and closes above it, right? And this is anchored in a very large liquidity run. So if you couple those things together, right, the stop run, and then price breaks this as a change in state, and this wick here being as big as it is, if it goes above that with the change in state, when it trades back down into it, the expectation would be that this is a balanced price range after a stop run, okay? And then that's when we would then look to try to get away from potentially the shorts, and then look to target things in a upper capacity, like these relative equal highs up here. Okay. So yeah, but for now, again, we're going to stick to the likelihood of this going lower, because now we got rejection. I mean, this is beautiful from that mitigation block I laid out for you. Nothing's changed. But the issue that I do have with this pre-market delivery is we have huge news events coming out. Well, pretty decently sized news events with decent impact with PMI. It's very, very violent a lot of times. Not like NFP or FOMC, but it's like it's a step below, but it still could do some damage. So, and what could be something underlying that could support that, or support price going lower, right? We have this here, like I said, we have this low here from previous day. So technically that's previous day's liquidity. And, for the buy side, we got relative equal highs up there. But I'm going to stick to, at least for now, seeing if price can continue to go lower. There may be a ceasefire or whatever the case may be, but it's still a war that's going on. There's still issues with trade happening because of the situation. But what the hell is that? Where's that? Guess that's right there. So you see how sensitive that level was? It's a new day opening gap with a new a first presented fair value gap and a new day opening gap overlapped. It just played with it a little bit. It's really respected it. So again, my attention for right now is these lows. And then in particular, the other PD array that aligns with that is the new week opening gap that is not fully balanced yet. Okay. Where is... So yeah, essentially that is my opinion. And if you trusted that narrative, you were just offered a macro mitigation block execution with beforehand analysis. Again, I'm just personally waiting because I do what I like to do. That doesn't mean that if you trusted this, you should have shied away from it. I don't encourage you to take trades. I'm not a financial advisor, but if you become proficient, like I said, this was a reasonable idea. All right, it's well over 30 points if I'm not mistaken. 30 points up there. 54 points to the downside offered. All you need is 20 to 30, and they offered it beautifully, very cleanly within the macro. So we got price. Well, first and foremost, we have time, which is the macro. It's the unreliable one, though. Sometimes it is reliable. But we got time and then price. And if you look at price on a larger view, too, we have this rejection. We got this wick, and it's respecting it. So that's a pretty telltale sign that price is going to continue to go lower. So that is what I believe should take place. Then we got the currencies. They're falling as well. I think that we'll continue to see this take place. So yeah, beautiful move. Beautiful move. Very interesting how it's running right to the target that we painted, huh? Using the exact logic and reasoning that we laid out. Whoa, dropping stuff. Pretty fascinating, isn't it? Must be because this is actually what's happening in the market, huh? What it's actually looking for. So again, if you guys have any questions, let me know. We're still ahead of the open. We have had a pretty dynamic delivery from the mitigation block. So yeah, that was a move that we called out. All right, pointed your attention to. And then the target's down there. Could have had 30 points. Why is this safe? Well, we have sell side, buy side, sell side again. If it's going to be a viable opportunity, this mitigation block, just like a breaker, should present you with a balanced price range. We have large sell side, so all of this displacement here is balanced out. It's not expected to come deep into a premium when it's like that, because it's already done work over here. Maybe it could have went a little bit deeper into this low or this gap, but it left it open. So we are exceedingly bearish right now. Okay. So we tagged the new week opening gap again. So yeah, let's see what that turns into. You see that SMT? Got bullish SMT there. But we'll see. We still have a little bit more that we can tag down there. If we do end up getting this to displace beyond the highs here, then we may end up leaving part of that gap open. It doesn't always have to attack them when they're left open like that every single time. A lot of times they are a magnet, but if they just refuse and they're looking to leave it for later, you got to be able to accept that. And with this SMT, that could be giving you an early sign that that's in fact what's going to happen. But nonetheless, it offered a move with the mitigation block. You could have even also used this low, high. If you anticipated the lower low, we had a wick in here. You zoom into this, we have a low, high, lower low. Maybe you could have entered there with that wick or here. This is what ICT calls an algorithmic rebalance right here. When you have a target that's really close and price just simply does a little baby imbalance retracement, tags it, and then it just rips. Of course, you got to be correct on narrative and get comfortable with that continuation. But yeah, it's definitely something to monitor. When we're really close to a level and you're really, really confident it's going to go down there, watch how many times there's a small little retracement just to build liquidity, build the sentiment that, oh, you know, maybe it's going to stop here, gives people some life. And then it closes below it and then immediately rips. See if we go to the 2 minute. So we do got this little fair value gap here to watch as well. So let's see what happens with this. We have this high, low. If it was to break this high, it'd be a breaker, potentially bullish. And then if it does that, the only way we would be able to look for shorts again is if it gets back down below the breaker area, the breaker block. But yeah, that would give us pause for a minute. And then we'd have to potentially look to see this as a small market maker buy model. Again, all of this price action that's pushing up, we have a target down here that's still available. And we have the wick here on the daily chart that's being respected. Not only that one, but we also have an order block and we have another wick too. And dollar seems to be finding its legs. So we should be able to see this punch through this low. Again, the only issue I have is it's pre-market open. And a lot of times pre-market is manipulation. So if you're bearish overall and we have news events coming like at 6:45 and 7 a.m. Together, it could potentially create some problems for you. But that's why we wait for the news. That's why ICT says we should wait for the news. Okay. Yeah, hopefully this idea that we shared makes sense. You know, we always find something, right? But yeah, if you guys have any questions, let me know. Also, don't forget to like the video, subscribe to the channel if you get value from what I do here. It definitely helps YouTube know that we have something worth listening to. We already know that because every week we show up and we find something, and we make sense of the chaos. But yeah, it's very helpful if you guys can do that for me. I'd really appreciate it because then I can help more people just like y'all. So, and it's free, right? It's a free thing to just support the channel. But yeah, hopefully one of you guys, or hopefully all of you guys understood what led us to this and why it was more likely for us to target down here, why it's still likely to look to go down there. We still have a little bit of a range that can still be offered. You want to watch this fair value gap order block combination here. We have wicks going through the fair value gap, which is totally fine. What matters is the closure of price. If it continues to close below this, the bodies are telling you a story, and the wicks are just doing the damage, offering price to different price levels. And again, pre-market, because this is a pre-market idea, the protocol for pre-market or counter trend ideas is to always have your risk cut and keep your normal risk when you're going with the overall narrative, right? It's a very dynamic way to manage risk. So yeah. Appreciate whoever just subscribed. Appreciate that. Glad you're getting value. I'm a ICT purist for the last 6.5 years. I only use ICT concepts in, trading, basically not needing a job for 4.5 years now. It's because of ICT. And, we do this every week too. You don't have to take my word for it. Um, the charts speak very loudly when you know what you're doing. I don't have to flaunt a lifestyle or do any of that. I refuse to anyway. It attracts the wrong people who aren't really trying to learn, who are just trying to be signal junkies like a drug addict, not really trying to understand how to become the supplier, But that's what we teach here, though. So for any of you guys that are new, but yeah, I'm an ICT purist. I stick to only ICT, and that's it. So the statement of do I think the 2022 model is enough? So I don't think ICT does a good job of breaking this down. It is okay and enough to have one entry model that you use to take executions. In that sense, of course, it's enough, right? You only need one weapon to do some serious life-changing damage to the market makers, right? But trading is a very complex thing, right? It's multifaceted. You got to understand risk. You got to understand, how to predict where price is going to go or anticipate. Some people say you don't predict, but what the hell are we doing if we take a buy or a sell? We're predicting it's going to go a particular direction. So anyone that says you don't predict price, they're idiots. They just don't know what's going on and they're ignorant to the reality. Or they're trying to convince themselves or their following that, you got to just accept when they, as the mentor, are wrong because everything's random, right? Right? But it's not. But in a sense, when it comes to execution, you do only need one, right? It's a great foundation. Everybody should start with the 2022 model. And then at some point, you are going to want to go through ICT's 2016 stuff because this is a language that's being taught. That's why it feels like a foreign language to most of us that are learning it when we're brand new. It's important to be around people that know what they're talking about so you don't get steered the wrong way with this stuff. You want to be around people that prove it so that when you have questions, you can get answered instead of being part of the blind leading the blind type of situation. You know what I mean? But again, to simply answer that question, 2022 model is absolutely all you need for execution. But there's more to it. And that's why it feels when you go through the 2022 model that it feels like something's missing. Like, there's a lot of different parts and components that are out of order, right? They're not in place where they should be, or we don't know what's important for right now based on our current skill set. And that's why a community like this, having a mentor, whether it's me or someone else in the ICT community, if you're trading ICT concepts, that's why it's so important to be around someone that can walk you through it live, like I do every week here on YouTube and every day in my private group. But, it is enough, but there's nuance to that statement being enough. You got to understand how to predict where price is going to go. You got to understand bias and narrative, right? What's the difference between bias and narrative? How do you navigate the PD arrays? What PD arrays are important? How do you manage risk? How do you determine what conditions are worth trading or not worth trading? How do you manage your mindset, right? How do you approach these things? What levels of liquidity are important? What is liquidity? How do you use it? What liquidity points are the most important every single day? So that's just to name a few things, but hopefully that makes you understand, like, it is enough for execution. You only need one. It could be breakers, 2022 model, any of the models that I personally have that are unique to our community. You can use any specific model and it's enough. They're all profitable. Anything that ICT teaches about models is profitable. What matters is what's profitable for you. What makes sense to you? What stands out in the chart once you hear a lecture about it, or join a live call like this, or just in your own back-tested studies? What stands out the most? You can mess with like 2 or 3 or 4 when you're in the discovery phase, which that's what we're in when we have less than 3 years experience. We're discovering ourselves. We're discovering how this stuff works. It's just like learning a language. Certain things are easy to grab onto and understand, but over time, you figure out your way of doing things, your way of speaking, your accent, right? And you put your little flair on eventually. But of course, simplicity also comes with mastery, right? Like no complex thing is simple to anyone until they master, right? Or have enough experience and are comfortable with all the different components, But again, one model is enough when it comes to execution. When it comes to the other layers of like how to make that execution high probability, or how to understand when and whether it is high probability, that's a skill set that comes with experience. And that's why I go live on these live calls. That's why I try to help traders in any way I can, because there's a gap between experience and where you're currently at. And when you're looking at certain concepts, right, this is something that ICT doesn't articulate enough. I don't know why. Maybe he tries. I'm sure it's probably not on purpose, but it is enough. But that doesn't mean you only study the 2022 model and that should be all you need for every element for you as the trader. There's multiple things. A lot of it's covered in the 2022 model series, right? He touches on many things. But then again, experience, understanding some more of the foundations, like going through the 2016 stuff. I think those are all foundations. Those are all mandatory things that should be expected when a trader's looking to learn these concepts. Because you got to think about what we're doing here, right? We're decrypting an algorithm. And then eventually we're essentially creating our own algorithm, which is your model, right? The if-then scenarios, right? Like if this happens, then this should happen. Just like an algorithm. You're basically turning your mindset as a trader into an algorithm, right? Try IFVG, 2022. Oh, 2022 playlist. Yeah, the IFVG is definitely something that a lot of people are using. I have my own version using a couple extra steps for verification. I call it the Razor model. It's an order block, or it's an inversion for value gap, stop run mixed with an order block at a particular level during a specific time around specific conditions. And then I have one that I've created for the wick deliveries as well, which I don't see anybody using. So it's a model shaped around the wicks. But the 2022 model, when it comes to just general understanding, it's like a prerequisite. It's like when you're going to college, you got to do, your prerequisite classes before you move on to the real beefy stuff. It's a requirement to make everything else a little bit easier. But the 2022 model is in no way one playlist that should solely be studied and everything else gets disregarded. There are certain playlists that are, in my opinion, after teaching people for 4 years since 2022, that I've discovered are very, very helpful. Certain tactics that I try to point out that I wish would have been pointed out to me sooner, like balanced price ranges, for example. And deeply understanding that, it just helps move you along a little bit quicker. Some people say your learning curve can't be sped up. Education-wise, it can, because if you have someone that knows what's going on, they can lead you to things that are a little bit more helpful. And if they can explain them in a simplistic manner, it kind of saves you time. So, realistically, having a good mentor does speed it up. But then again, the word mentor is totally tainted in this industry because there's a lot of douchebags that don't have good intentions. At the same time, most of them don't even really know how to trade anyway. There are a reasonable amount of good mentors. I'm not the only one that has students progressing in a reasonable manner. But it just kind of depends on your style, how you like to be taught. You kind of have like a good buffet, if you will, of different people, different personalities, different styles. Um, but yeah, you want to make sure that they know what they're doing. But yeah, if Zig, if you want me to help, you know, let you know like where you should be looking, I'm more than happy to do that. If you could share with me on Instagram or however, if you're in my free Discord, or if you eventually become part of my private group, um, regardless, you can just send me DMs if you have any questions. I'm willing to help. You don't have to just be in my private group for me to help you. I have a lot of students. I work with 21 students right now, one-on-one. So definitely takes a lot of my time. Um, but I eventually get back within 24 hours for sure. A lot of times sooner, right? Because this is all I do. So I don't leave you hanging. So that's always open if you need it, okay? I appreciate you saying that, DJ. Yeah, DJ, you've seen some spectacular stuff since you joined, a couple months ago, maybe a week ago, or not a week ago. I think it's a couple months by now. Let me see, did I miss any questions? No. Yeah, DJ, what would you say that being part of the private group is basically as I'm describing? Would you say it's like that? Any of you guys that are part of my private group, uh, you guys could chime in too if you want. I know a couple of you guys are on right now. 2 months in so far, it's 100% satisfied. Hey, that's what I love to hear. Love to hear it, you know? And I don't claim to be perfect. I don't claim to be the best. I don't shove what I make down your throat, right? I let the chart do all the speaking. I spend ridiculous amounts of hours with you guys, which I love to do. And seeing you guys progress, having you guys have a good experience with me as a mentor, whether it's just here on YouTube or, especially in the private group, it's definitely the goal. I don't want to waste your time. And I just want to give back, you know what I mean? But there obviously has to be a filter because not everybody takes it serious. And I want to only work with serious people. It's a lot more loose here on YouTube, but when it comes to like one-on-ones and like that really, really deep personalized learning experience, there has to be a separation. I did it for free for a long time. Like, well, I guess a year is not a long time, but it just wasn't satisfying to me because students weren't taking it serious. Spend some time here though, and you see me call the market every single week. I mean, it starts to be pretty eye-opening. Like, wait, there's something here. He's a normal person. I'm not some, cryptic, undercover market maker. I'm just a normal person like you guys, who just never quit. Lost tens of thousands of dollars to learn this by myself, between ICT and other mentors, and blowing funded accounts and losing personal accounts and feeling like this is impossible and all that. So I know what could have helped me. So I try to give that to you guys, and I'm glad to get testimonials like what DJ shared right now. That's what I set out to do when I decided that I wanted to teach, or just pass the blessing along. I keep it accessible to everybody. I'm not like everyone's trying to be like, yeah, you need to give me $10,000 or I'm not going to work with you, because that's just what I need for whatever reason, right? Like, that's not at all the vibe here. My students set how much I should charge. So that's how you know. It's lower barrier to entry in terms of the one-on-one element. And we offer the one-on-one element, which nobody does. But it's the lowest price for that access to someone that proves every single day that they can call the market. So, and it's going to stay that way. I don't care how big the following becomes. I cannot do anything and just trade, and I could be satisfied. But you learn over time especially when you get to be a trader that only depends on trading and you don't need anything else. You start to realize that it's a lonely game, and you run out of things to do, right? So some people are cool with that, and they're just like, I'll just be, an isolated hermit crab. But I just thought, why not pass the blessing along? I've been blessed enough to have worked so hard to be able to have the opportunity. Why not try to do my best to help in both a free capacity and in a private capacity for those that need more of a handheld experience? And there's only so many hours in the day too, so I kind of also got to make sure that I'm working with the serious traders when it comes to one-on-ones, just like the private community. Let me see. I'll take learning from you over these profitable gurus any day of the week because you're genuine and teach the right reason. Yeah. Hey, I love the fact that you're saying that, brother. I'm glad that you feel that way. Definitely makes me feel like I'm doing the right stuff as I'm teaching. Over the years, it is kind of, it's hard to teach certain students. As I've gained experience as a mentor, though, I've figured out kind of what works with certain people, well, with the majority, and then certain people have their specific needs. But a lot of these people have been trading for like 2 years, and then they have a course, and then they're having people buy it because they have a following, and it's like, dude, really? Like, have at least 3 to 5 years, at least, before you even try to teach. Especially if you're not profitable, there should be nothing being taught, right? Unless it's like lessons and you're just documenting your journey. There's nothing wrong with that. But people are coming to people to learn because they're trying to provide for their families. Like, this is not a small thing. But most people on social media, these mentors, they don't take it serious. They don't really consider the damage that could be caused and the time that could be wasted that these students cannot get back. Like, they don't consider that, and they're not teaching for the right reasons a lot of times. Most of the time they're teaching because they need the money, because they can't trade, or they're not making enough. So like, how can I maximize? While I'm struggling and trading, how can I, still be able to do this and not need a job without actually being successful in trading? That's the mindset of most of these mentors, whether they want to say it or not. Because you sit on some of their live streams or join their communities and see how hesitant they are to do stuff like this. I mean, it becomes very obvious if you spend like 2 months with someone. I've literally joined like Mamba FX. I've joined those to just see kind of what's going on, how they run their community, whether they're actually profitable. And no shade on anyone, but most of these people aren't as effective as they claim to be. If you took every signal that they provide, you end up in the negative. Even if you're taking the smallest entries or targets, So yeah, it's a little unfortunate, but that's why, there's always going to be a lane for people that are sincere in this industry. So yeah. Let's see. Yeah. Hey, I'll give it to him. He's a really good marketer, bro. Very good marketer. He's reasonable at trading, right? Like, he knows after years of doing it. I mean, you learn at some point how to be somewhat profitable. But the lifestyle that he lives, it's because he has many, many things. It's not because he's a trader. And the problem is he mixes the marketing and his other incomes into the trading, claiming that that's the lifestyle he's living because of his actual engagements. It's just not the case. He could still probably live a reasonable life because he has a lot of money and can have a really large account, and he knows how to trade a little bit, but it's not the gains that you see, the lifestyle. It's generally not because of trading. They'd have to be spectacular, right? And most of these people are mediocre. They're just really good marketers. Very good at deceiving. So we see the run up here. It came back to that mitigation block. We've now tagged out early sellers. So I would trust this a lot more than things prior. Obviously, this worked out. Obviously, we called it. But with something like this, if we can take this like it has, we now have a change in state here. shift in market structure after a stop run. If you're trading the YouTube 2022 model, there's no entry in here for you. Right? If you're taking an execution from the 1 minute, there's nothing in there, and we're still kind of stuck in here. I'd prefer to see us break down below this low, use this as a bearish breaker, and then kind of use that to justify a potential idea targeting deeper into the sell side here. One thing that is kind of iffy is the fact that we have an SMT there, but I'm not sure. I don't really think that's going to hold, at least until it gets down into this, because this is an imbalance. It has to offer to the imbalance. And why does it have to do so? Because at some point it has to get down there. It may not need to right away when you see it. At some point it is going to have to get down there. And depending on what price is doing, it has to go down to those inefficiencies because it needs to offer both sides and be efficient for trade. You know, if it just never offers a particular price level, then the trade that's being done, or the large traders that have orders down there below that liquidity inside that inefficiency that only offered one side, they won't be able to be in the market and participate. There's buy and sell orders at every single price level. So that's why it has to go to these inefficiencies. And when it doesn't offer the other side at a particular level, like say at 24,271, if only buy side was offered through that, the people that have short positions after this displacement around that level for whatever reason, they're not going to be able to be tagged in until they send price into that and offer the idea there, right? So that it's kind of like, in a simplistic manner, why these inefficiencies are the way they are, and why they are inefficiencies. It's because one side's offered, and eventually they have to come back because it has to be efficient. To be efficient, it needs both sides to be offered at some point. Doesn't always have to do it right away, but at some point it has to be offered. This right here was also reasonable. We're now creating the bearish breaker. So we can actually go right there. See if price can give a little one right there. This would be an early idea. There's no fair value gap in here. If there was, it'd be a little bit more reasonable. But we did have this one in here, the gap that I just moved this from. So that would be enough as well for that. For the reclaimed, after a stop run, we got the mitigation block still respecting. So the whole idea, the whole narrative that we painted, still in play. Nothing's upset it. Now, if this high would have been taken and a failure swing was presented, that would have put my attention up here. Okay. But again, the whole idea that we painted out, it's still unfolding here. We are ahead of the news. So, there's nothing wrong with you making the decision that the news is not happening yet. I want to see what happens in the news, which is also in the macro. All right, we do have the regular trading hours gap up here as well, from yesterday's close to today's 6:30 a.m. Pacific Standard Time open. So yeah, you could have, been a little bit aggressive. I don't take trades right at the 6:30. So this is kind of outside of the rules that I engage in, especially at the end of the month, right? So I'm waiting for the macro regardless. Aggressive executions could have been this for the mitigation block, right? Stop run, all right? This one here was a mitigation block, the one we called out earlier. And then, of course, this right here, right? This is part of a breaker, low, high, lower, low. It didn't offer another opportunity into that, okay? At least from this 1 minute chart. Did it offer it down there? No. It didn't even offer it here either. So we got another mitigation block here as we engage the liquidity. And you see the SMT that was there as well, going into that initial mitigation block we laid out. That's basically held up. It's right here, reasonable for continuation. It is kind of taking off before the news. I kind of wanted to see this happen, during the news or after, not so much before. This was also above the open price here, so you can kind of see from the daily range, accumulation, manipulation, and now we're distributing below that open price. So if we move up a little bit, let's see if we can find a reasonable fair value gap. We do see this wick here. So if it's going to remain bearish, the characteristics that have to happen if we do trade up like it is, we're going to have to see this wick hold. This low to that high should be a mini balanced price range. It's also a breaker. You guys know that breakers are also balanced price ranges, so they should act as such when traded back into. And then if they start breaking the midpoints, that becomes a problem. Okay. So we got this displacement here. Tag the 50% of, the gap that's still available. If they do turn around, I would definitely prefer to see this closed entirely. Otherwise, that's still unfinished business that could be upset with a displacement, right? It could displace again and then just look to come back down just to try to fill that in. Because again, it's still inefficient. Traders that are at this level down here have not been engaged. So they haven't even been offered a chance to get in. And they need to offer price at these levels, for it to be efficient. You see it tagged it right there. That may lead, especially if it gets displacement from there, and that's as far as it goes. That may be what leads us to the rest of the gap being filled. We're approaching the macro. So yeah, unless this low from this high, 50% level is violated, we should still be able to continue to see this go lower, especially if this is going to hold below this wick. The downside movement is supported by this wick too, right? That wick went into that fair value gap on the 16-hour chart. But if you don't want to use that, you can also use this up movement. That's an order block. Prices came back up into that, rejected. Now the next candle has created bearish power 3 like we outlined here. Best sells come from above. The best buys come from below. But as long as this continues, if we continue to see DXY using this low here as a launching pad to get us up beyond through to the buy side, we'll end up continuing to see this respect. This current candle couldn't even get to the 50% of this daily wick. So that's a very telling sign. The price is still looking to try to go lower. And we got the little balanced price range, the low being respected. We do have a first presented fair value gap in here. So that's going to be significant. We want to see it stay below that if we're going to continue to also support down movement. So far, we are below it. And the bearish power 3 looks like it's unfolding. So, the high of the day was formed in London. We're getting failure swings here too. Very strong rejection, reasonable rejection from this wick here that should, because it offered sell side and then we offered sell side again, merged with the buy side, should act as a balanced price range in that little area in itself. So this first presented fair value gap, given that dynamic, should hold in price when it trades up into it. If it just flies through it, and then we also break the midpoint here, we would have to then try to consider the likelihood of us maybe getting back up to here, and then us leaving this area available. So this is going to be significant. So let's watch this. Let's watch how that is treated there. It is Tuesday, right? We have already set a low a week so far. This is an inside day. So the previous day, which is Sunday, the high and the low, the current candle is trading inside that. So, an inside day is a lot of times low probability. But this is why you definitely want to wait. It's another reason why you want to wait for the news to come out, so then you can get a better feel for whether we're going to get outside of this inside day that we're currently trading in. And again, we got liquidity up here. If it does want to get up there, until it proves that it wants to get up there, I'm not really going to be too forceful with that being the objective. Unless it fills this entirely in and then displaces aggressively and say DXY declines, that would really get us in position to then catch this going to the buy side or frame it out. For me to catch a buy or frame this out as a buy, because this little gap is down here, I'm going to have to see this get invalidated. And honestly, I would probably try to look for this. I would definitely look to try to see this as a bullish breaker instead. But again, that has to form before I look to take a buy. I'm not going to pick a bottom. This just simply looks at the moment like a retracement. You see that all three of the indices are having this wick closure of the gap, and then price can't even get to the 50%. That's not a bullish indication. It's bearish. At least for now. If we close like this, that's what it's showing us. It'd be a different story if by the end of the day this closes beyond the 50% of this. In that case, we may look to try to target this high on the next day. But that's all, forecasting, further down the line. None of that's happening right now. What is happening is the sell side is being engaged. We're just in a form of retracement here. So we'll see. All right, we got a breaker in there. I'll clean this up real quick. We're now inside the macro too. So, if we can continue to hold this, say it breaks this order block here, that'll be a change in state in my mind. So that may be the trigger, the hairpin trigger, trip line that then looks to finish off the rest of this once it breaks through it. So keep your eyes on this in here. See how that's treated. So let's see if we can get price to get through that a little further. It is still trading inside of this new week opening gap. So again, we got to see, is it going to respect it or slide through it? I think we'll still be able to fill in the rest of this. Like I said, the tripwire right there is kicked in. We'll see if it can give a follow through. Yeah, DXY sideways. We are kind of a bit hesitant in here to really go. That's in part because we got news coming up too, so they could very well be loading up. So let's see if we can get that one last push through that. There she is. Okay. I'll take it there. So yeah, I did engage this. I've been saying what the narrative is, what I want to see. Once it triggered that was enough. It's a little bit before. Entry was a little bit before. I'll show you guys real quick. Oh. Why does it look like that? It's a little bit lower, so 200. The 200, and then right before, whoops, put up a little bit. 50 right there. So yeah, 31 stop, 31 point stop, 53 point gain. Obviously, you could hold for more, but you guys know that my default, I lead by example. Although a lot of the moves that we call run hundreds and hundreds of handles, many, many times, your expectation every day should not be, let's target hundreds of handles a day. You can do that eventually when you gain more experience. I don't encourage you to do that. Nobody should be doing that or having that expectation right away as you're learning. You want to build that confidence through small gains. 20 to 30 points is enough. Look at that right there. Got DJ catching the same move. Beautiful, bro. See, this is what happens here, right? I don't necessarily come out and throw a bunch of signals out. I do sometimes, but I point you to an objective. You then are expected as the student to then figure out what your model is, and then if it aligns with your analysis, the things that I point out or I'm pointing to, then you can take that down, and you can feel confident that you're also having the bigger hand in it. You know, I'm just here to kind of guide, and then you make the decisions on your own. I feel like that creates a better learning environment than me just coming out and basically becoming a signal dealer and making people follow me just because they want to catch my signals. I make it so you have to put in work because I sincerely want you to succeed. I want you to sincerely learn and be able to provide for your family when it comes down to it, when you make that decision. You know, I want you to have the option. I can't guarantee it, but I can guarantee that I can get you clarity. You know, that's a absolutely easy guarantee for me to give. You know, I can never guarantee profitability because I can't take your trades, and I'm not going to take your trades, right? But once you have clarity, it's a lot easier to do things, you know? And I feel like based on feedback, I feel like I've been doing a pretty good job of that since 2022. You know, I feel like it's really engaging and it's exciting because you eventually see how to do the analysis. And then when you take an execution, you know for a fact that you did that. You just did that. Like DJ right now, you just had the cojones off of the analysis. You know, hopefully everything made sense, but you had the confidence to be able to execute something that hopefully didn't feel too anxiety inducing. Hopefully it's like some type of trust inside you was like, yeah, this makes sense. He's been teaching this. He's pointed this out also just in this context. He pointed this out today. And I feel confident in my ability to, one, manage risk, accept the loss, and be satisfied with enough. You know, 50 points is enough. 20 to 30 is your only objective at first. You got to stack those wins. And then the better that you become with the analysis concepts that I teach, from that higher time frame to the lower time frame. Of course, ICT taught it, but you know, I have my style within that ICT purist mentality. You know, but eventually when you get better at that element, that's when you can invite the bigger moves. That's when you could then go on to like the 15-minute chart when you're taking executions on the lower time frame, and then you can manage it from those bigger perspectives. But you gotta work to get there. You know, you can't just learn 2022 model or any other model like the breaker or anything else and expect that hundreds of handles are going to be very easy to attain. It takes more time to and more detailed breakdowns to be able to really understand, you know, when a big move like that is going to take place. That goes over 100 plus handles. You know, 100 really isn't really much in the Nasdaq. I mean, we did an 800 point run yesterday in 15 minutes. One 15-minute candle. I mean, it's off the hook. It's insane. More volatility than ever. But again, you guys will get there, you know, and the luxury of being in this community, excuse me, is I pay close attention and I spend the most time on the higher time frame. Okay. Every Sunday, you notice that the calls, I never drop down to the lower time frame ever, unless I'm trying to refer to something specific. But even then, I don't even encourage you to do that through my actions. I encourage you to do things that I talk about, right? And things that I showcase. you know? So it kind of forces you into a certain way of thinking, and you focus on the higher time frame. And that's planting the seed, planting the skill set for you later down the line. Because I know a lot of you guys are going to want to graduate from 20 to 30 points. At some point, it gets really boring to tag 20 and 30 or 20 or 30 because it just happens so much. And we literally, every single call, whether I take a trade or not, we're pointing out at least 3 setups. Like, think about it today. This was one setup, right? The breaker, that's another setup. You could have waited, right? And took this like I did, right? Use the breaker. You could have used this in here too, right? Just if you trusted and anticipated the breaker was going to unfold and you trusted the narrative, there's nothing wrong with this in here, right? We got the wick in here. Notice the respect to it. Once it closed on this bullish candle here, below the 50% of that, and below this change in state of delivery, that's enough to take an execution and target simply the low here. You know, has this move been upset yet with the current price delivery? It's slowed down because we got news. Like, this is what happens when you approach the news. That's why it's dangerous to trade so close to it. This is the same thing that happens when you trade too close to the open. You can expect that this is going to happen a lot more than you're comfortable with. And those will be the times where you get stopped out and then eventually you're correct. Like, the overall day will be correct in your analysis, but you'll have gotten stopped out because of time, right? But there's many setups in here, right? From this one that I pointed out early on, pre-market. You know, you could have taken this, right, which is part of the mitigation block here, the larger perspective. That was probably the best move, honestly. But if you didn't trust that, you also had this, right? Hopefully I laid out the logic as far as why that is reasonable enough. We also have that being below the regular trading hours gap. It's also right next to the open price for the day. So if we have a bearish power 3, which is what the assumption is, you know, it should be able to hold below that. It shouldn't go all the way up here unless you're wrong, right? And if you didn't take any of those, you had this one that I talked about, the tripwire here. You could have literally just chose to use that aside from the earlier execution that I took. You could have just simply used that. Once it tags that, you have a sell stop right there. Stop goes above the current candle or the high if you want to be more conservative. So these are ways that you learn over time that you can get back into a setup. Now, if this fails, right, say it gets beyond this breaker here, what happens to a breaker that gets invalidated? Let me know in the chat for those of you that know. Right, if this gets invalidated, this previous breaker, what does that turn into once it's violated? And if it doesn't make sense, just throw a 1 in the chat so I can know where you guys are at. If it does make sense, let me know. Or if you do know what it is, let me know in the chat. If it doesn't make sense, put a 1 in the chat. Like, or if you're just like unaware of what happens when a breaker's invalidated. There you go, George. Exactly. It's inverted. So if it breaks beyond that, what should we expect when it gets above this high here? We should not end up getting price to go back down below this low, right? Preferably not even below the 50% of this breaker block in here. Because every PD array, for the most part, has an inverse nature to it. If a fair value gap fails to hold going bearish, what should it do? It should go from a bearish breaker to an inverted bearish, a bearish fair value gap goes to an inverted fair value gap, turning bullish, going the other way. Right? I'm not saying that that's what's going to happen here at the moment. I'd need to wait for this to happen, preferably. This could be a early supporting idea, though, right? If this happens and we get up beyond that, price is starting to communicate to you that it's not willing to go lower anymore. Okay? Well, we'll see with this, right? We also have this high, low, higher high. So we need to make sure if this is going to have an early sign to be bullish, we need to see it hold above this candle here. Right? That's the breaker block. Look at the bodies of the candles. How are they going to close in this first presented here? If it closes like this and we displace, now we have a change in state here. We have a first change in state here once it got above it, because this is an order block. If you move up, okay, order block. So one change in state, and then the other little one, when we drop down, we'll have a second change in state if it gets above this. We have an inverted first presented fair value gap. So, and then if we break above this breaker here, we could then look to target these relative equal highs. It's going to be high resistance when it gets up here. I'm assuming if it does go up there, it's going to be high resistance because we already took the stops out. So it's a stop run already. And it's a breaker. Breakers are a high resistance signature when they're trading into them. That's why when it does the breaker activity, it's not expected to really go up here or even beyond the 50%, because it should act like a brick wall. It's a balanced price range, buy side, sell side delivery. And the last place that they had a short, before the run higher that took the stops, that last sell-off, aka the breaker, right? The breaker candle or consecutive candles, that'll be somewhere that's very sensitive, just given the way that price delivered there and the functionality of that piece of price delivery in the grand scheme of things, right? In the price leg. All these concepts can be made very complicated, but you don't even got to really worry about what I just said if you don't want to, if it's complicated to you. Just know that the last down candles prior to the up move, once it's violated, that's a balanced price range. If you're correct and it's going to go lower, it should be treated as such. And 50% of that should not be traded through from the low to the high. Preferably, it stays in the lower portion where that last down candle is, where the breaker block is residing. And preferably, it closes below the 50%. It could trade up into it. Preferably, though, if we're correct, we should have dynamic price delivery away from it. For now, we just had news come out, I believe. Is that 7 o'clock the news came out? Yeah. So, yeah, that news event, it's kind of lethargic. Not really too exciting. But we're watching it. Okay, so on the 5-minute too, we have a 5-minute bearish breaker here as well. You see this wick right here after the stop run? If price respects the wick here, which again, if we go to these lower time frames, it's this, that's the wick. Right, if you move to the 5-minute chart, right? We have the breaker here. Honestly, let me actually utilize this range. This is better. It's a larger time frame. The other little one that's inside this, it's still valid, but it's a little bit lower time frame. All of that's working inside of this bigger one. So again, none of this has changed from bearishness to bullish, right? We need to see it get beyond what I mentioned. Ironically, the high of the 5-minute breaker, the last down candle, is above this one too. So they work together. They're inside of one another. So you always want to use the higher time frame levels when you have that like dovetailing effect, right? Or nested PD arrays inside of a bigger one. You always want to use that higher time frame, those levels, more so than the lower time frame. You consider the lower time frame for more precision within that bigger one, but at the same time, you still want to make sure you're anchoring your trade ideas off of something that's in a larger capacity, time frame wise, than your execution. If your execution's on the 1 minute and you're trying to find your model on the 1 minute, you want to nest that process or procedure inside of a larger PD array. Like if you're trading a short 2022 model on the 1 minute for the Nasdaq going lower, well, you want to see that stop run that triggered that 2022 model sequence nesting inside of like a 5-minute order block, a 15-minute order block or breaker, or whatever else. You want to see that nesting effect take place. That is basically the golden rule when you're trying to catch things larger than 20 to 30 points. Your entry can be on the lower time frame, but you want to have the framework that anchors the reaction from the higher time frame, something bigger than that lower time frame execution. So yeah, we can now see that it's kind of giving this up now. Hesitation for the delivery. So now we're getting up above that. So what did I say? This should now turn into an inverted breaker. And then we may, like I said, now start to see it go up here. This is a market maker buy model as well. If we were to go to the 15-second chart, you could start to see it. Second stage distribution will be up here. All right, so the upper portion here, if it could trade above that, it should act as support. This high, low, higher high should also be significant. We should not, if this is bullish, come back down below the 50% of this little range here. All right, this is kind of in a range-bound environment for now. Thought it would be a little bit more dynamic this morning. Obviously, there's opportunities. Doesn't matter what the condition is, we're able to find something. Found already, or pointed out already 3 reasonable ideas. You see the little mitigation block in here? High, low, failure swing that breaks down below. Beautiful mitigation block. If you take this low to that high, notice how it took out a fractal high. So that's a stop run. Breakdown. So this down candle is not only a mitigation block in the larger swing here, but it's also a mini breaker. See how it respected that? Body's closed below that down candle. Also a fair value gap that inverted. Body's closed inside of it and then displaced. This right here would be a safe conservative execution with that happening. Aggressive would be taking the high up here. There was SMT as well above that. It's also nested in a larger PD array, right? A larger retracement. And then you could see the price took off. Order block, it's another execution. Or you could have executed right there because that's a change in state. Came back into it. Maybe you waited even further. Okay, well, there's a secondary one over here. We got failure swing, equal lows. Serious equal lows, right? So that retracement, once it broke down below that again, that's all changes in state. Price is respecting wicks, the midpoint. It's respecting bearish order blocks, breakers. Stop runs to the buy side are leading to displacement to the downside. That's all bearish order flow for that moment. And then it got down into our main target. So now we're kind of pushing away from this. So you notice what I said about this high to that low. If it's bullish, it's going to have to respect the midpoint. This fair value gap down here is inside this range. So because this high, low, higher high should be a balanced price range, like a small piece of balanced price delivery, this fair value gap should not be traded to. Why do fair value gaps get left open? Because of balanced price ranges, right? If there's a wick that shoots up before this displacement or like coupled with it, that's also a BPR, right? If there's like a large wick that takes place. Notice this right here, okay? This high right there, right? Notice how the upper piece of that fair value gap was the only thing that was offered, right? It doesn't always have to leave it wide open, but this right here, this concept hopefully makes sense, right? I'm not saying there's a buy or a sell right now, right? I'm not saying enter at the moment. It's too sideways right now. It's very jerky back and forth. I do have my eyes up here though, just in case. But this high to that low, 50%, ideally if we're in a low resistance capacity, it's not going to fill this in. You notice that it just filled it in, right? Generally, if it's a fast-paced market, it's going to do this, like I said, because again, this is a balanced price range. This wick, it's acceptable, right? It's not something that we want to see if it's a fast run to the buy side. We want things to be left open. But if we close above, that still supports it, right? If it continues to close above this gap, it'll continue to support price going to the buy side. And then we use this same logic on every time price delivers a retracement and then keeps going. Retracement keeps going. It's leaving behind balanced price ranges. The higher the time frame that you move up also, this becomes order blocks, right? So these down movements here, if I go to the 4 hour or the 4 minute, 3 minute, you see the 3 minute, it's an order block. That is part of the 15-second consolidation that we see, right? So if it's bullish, it needs to hold that. If it's not, we know for certain that things are not going to end up being bullish, or at least a high level of certainty that bullishness isn't to be trusted once it breaks through that. So what does that mean for your opinion, right? That means that you now have to start thinking of this failing. If that fails, then it's probably going to continue to be bearish. This concept is used also on the larger daily perspective. Like if you're on, say, the daily chart and you're observing price, or the 4 hour, this same logic is occurring here as well. Low, high, lower low. If it's a continued sell-off and it's going to be trustworthy, the 50% of that range should be respected. When it trades into it, it should close below it. And it's doing that, right? Notice we broke down below that now. So this buy side to sell side should be a market maker sell model now. A failed small market maker buy model. Failed balanced price range here to go higher. It faked it out and then declined through it. So this here is now still part of the mitigation block delivery earlier, reaching for this in here. You see how risky it is when you're trading against something that is not efficient? You see how the buys, they did offer some stuff in here. You could have maybe had an opinion if you thought bullishness for whatever reason. It did offer a couple of different things in here. We got the razor model here, right? Those of you that know the razor model from the private group. But it was short-lived. Framework was potential for market maker buy model targeting the highs up here, assuming that this was going to fail. Notice how we had a very small time spent above this level here. That was potentially going to act as an inversion. It faked out a little bit, pretended, and then collapsed. All right, notice how it spent very little time there. So what that tells me, if I'm on that lower time frame, what that tells me is that this was most likely just a wick that shot up there. As you can see, that's what it was. When it wicks through something, that's totally fine. The closure is what's important. We're still closing below. We are now officially range bound, right? It's pretty much stuck between this regular trading hours gap low and the new week opening gap upper level that's inefficient. SMT with NQs, yeah, I seen that earlier too for sure. You see it from the larger view too? No. But yeah, we're just back inside the range. But yeah, so do the things that I've just laid out make sense to you guys? These are very, very important things. People discount some of this stuff, and it's like, if you only knew, right? Like, you will know if you hang around long enough, because I do this stuff every day. I talk about this stuff literally all the time. And I show you that it works. I show you how it helps you develop a narrative. I show you how it helps you trust what it is that you're doing, and when not to trust whatever it is that your assumption is, right? So yeah, this breaker here is still holding up from that 5 minute. Notice how we're closing below. We have buy side, sell side. We got this low, high, lower low. This in itself with this first presented for value gap is also a breaker. We're below the first presented for value gap again. We went through it and then back below it. Generally, this secondary trading through it like that, if it respects it, a lot of times that's going to be another opportunity to then try to take a short down to here. Or if it was the other way for a buy, it'd be the same thing. But this is something that's very unique to the first presented for value gap of the New York session, or the first presented for value gap for the PM session around 11 a.m. Pacific Standard Time to 12 p.m. Pacific Standard Time. So yeah, this, if it's going to deliver, it should be able to push us through off the heels of this. We should be able to get that attempt. And then simply look to target the rest of this new week opening gap that's inefficient. So yeah, let me know, for those of you that have been with me throughout this whole call today, let me know if it makes sense. I know there's been like 1 or 2 new people. I really want to hear from you guys. If you're really brand new, a lot of this stuff may be like, holy crap, like what's going on? It's totally normal, right? Just know that this is a hard thing to do. It's not like playing the lottery. You know what I mean? Like there's a lot to this, technically and mentally. If you want to be a full-time trader, right? If you want to be a proficient superstar that changes your family tree, you should expect that that feature being offered in trading is going to demand a specific level of skill set. Skill set's not developed from really mediocre study or just like a surface level understanding of whatever it is. Like a doctor doesn't understand the body at a surface level. Like they understand it ridiculously, especially a surgeon, because they don't want to hurt you. Well, the body for us is our account. Our further canvas is the market, right? Things that we're trying to observe and do operations on. We got to be able to be accurate or we're going to cut ourselves. You know, just like a surgeon would, you know, when they're doing surgery. They have to be highly proficient, highly versatile in their understanding. And it's the same thing with you. You are a surgeon operating on the market to make it so your account can be healthy. You know, and to be able to achieve that takes time. Takes the right people, right information, the right mindset, and a deep, deep interest in truly understanding how this stuff works. Mike, what's up, Mike? Good morning, Fancy. Appreciate you hopping on, brother. Mike, you got a question? If you got a question, you could send it. So yeah, we'll see how this is going to be treated. It's reluctant to get through this. It's kind of like a magnet holding price at the upper portion of this new week opening gap. Should I? Oh wait, am I missing something? It was weird. My chat has a weird glitch on it. So strange. But yeah, if any of you guys have any questions, just let me know. Everything analysis-wise, we've pretty much laid out. We're kind of stuck between this, so I want to see what this is going to do in here. It's not necessarily overwhelmingly trustworthy for a short. I'd prefer to honestly see this run higher, fail, and then break down below this, and then maybe return back into that for a more conservative idea. You know, if we take the stops here again, if this is going to be bearish, we should respect the midpoint of this. Preferably we stay below this last down candle. And then of course we have that 5-minute bearish breaker as well that price is kind of accumulating inside of. Is it a larger one too? Yeah. Got this wick in here, that midpoint. If it's going to respect that and go lower, it needs to stay below that. You know, now once it does this, right, we have a high, low, high. If it leaves us with a failure swing here, that could end up being a problem. You see this over here too? This is actually the previous day. Previous day's regular trading hours gap low acting as support. Actually have this in here too. I'll put this on the chart just so we have it. And you notice that 25% of the previous day's regular trading hours gap was dynamic too. 50%. Wow, isn't that interesting? The high of this where the initial, return into that mitigation block was, perfectly aligns with the previous day's regular trading hours gap 50% level. Couple that with the mitigation block, and it makes it a little bit more powerful to see this go lower. Just further context as far as why we were correct this morning. Yeah, again, none of this is telling me that we're overwhelmingly bullish. I'm still very much interested in seeing this piece of price delivery get swept out. This breaker, look at what it's doing. The bodies are telling the story. It's still bearish. It's still holding on to the 5-minute breaker. We're also holding on to now this 1-minute bearish breaker as well. It's reluctant to go higher. Problem is, it's also reluctant to go lower in a very fast capacity as well. So let's see what it wants to do here. It's a very slow movement. Overnight, I mean, it was pretty vicious. So, I mean, you can add that, to the scenario where, we always talk about if there's a fast previous session, fast London, fast previous day, fast pre-market open, many times going into New York session, it's going to slow it down. It's going to slow the pace down because they excited everybody pre-market. It wasn't slow or just like a normal delivery in London or pre-market open. It was very fast, all over the place, right? Up and down, choppy, up and down, took liquidity. And then now we're kind of stuck. Again, but none of this price delivery is telling us that buy side is going to be targeted. It's respecting the things that are being used to hold price to go lower. The PD arrays, the fair value gaps, highs are being taken and then rapidly traded away from. We're not really having any fair value gaps being left open. That's a telltale sign as far as what the condition's like. Is it low resistance or high resistance expectation? It's high resistance right now. You could see, if you look at the chart, there's like no gaps that are left available, except maybe 1 or 2. Yeah, only 1. Literally only 1. But even that had buy side and then sell side. So again, this breaker's acting as a nice balanced price range. So is this, right? This entire range up here, 50%. You see how solid that is? How it stopped there and then immediately changed state of delivery again. Now we got a stop run. We got a breaker. First presented for value gap that's holding price below. If we move up in time frame, I'm sure that's probably an order block too right there. Yeah. That lower time frame breaker, you see it's an order block. We have a fair value gap in here too from the previous macro. Drag that over. And again, it's staying below this. It's staying below this. Staying below the first presented fair value gap. Staying below the initial starting point, which was the mitigation block. On the daily chart, we're respecting that daily wick. On the 4-hour chart, we have a change in state of delivery here. We're respecting this upper portion. The closure of this delivery after it hit this fair value gap, which is basically what created the wick from the daily chart yesterday. We're closing below, right? The next candle closed below the 50%. And now we displaced. We got another wick here. Price is respecting that wick. These things can't be happening if we're bullish, right? If it's going to hold and go higher, this needs to be violated. Down wicks need to be respected. Bullish order blocks need to be respected. If we get above this candle here, say it was to get up beyond that, if it trades back down into it, that's a balanced price range, right? That's a telltale sign. Maybe you don't trust it. Maybe you need to respect it. Then you can trust it. There's nothing wrong with that, especially if it's a range-bound environment. Let price come to you. Be demanding. This is your future that you're trying to deal with. It's not something to be willy-nilly about, swinging at the fences, swinging for anything and everything that moves. A lot of us put our future into the skill set. So we want to pay close attention to detail, let price come to us, be responsible, manage risk, don't overtrade and over leverage, and wait for price to do things that logically make sense relative to what it is that we do. And just how price delivers, right? From liquidity to inefficiency, how balanced price ranges are treated, what balanced price ranges look like, where they fit in your overall analysis. These things give you the best odds. At least that's my opinion. All the stuff that I talk about is, unless it's like a super complex idea, a lot of times I try to keep it simple, to the point, to the specific things that really matter, that are applicable right now. So yeah, we see this first presented fair value gap. I definitely am paying close attention to that. You see that it can't make a decision. We're stuck. Again, this is typical when pre-market open is so fast and when London is so fast. You just got to think, as if you were the market maker, why would they be trying to do that? Why would that be something likely and very common? Why would they do that? Well, anytime someone sees a rapidly moving market, what do you think? What's the first thing that comes to their mind most of the time? Oh, I'm missing something. Okay. Well, they'll make you feel like you're missing something and then slow it down so they can chop you up before they then send it one more time. It just shows you why time is so important. How referring to previous price delivery from previous sessions and previous day is important. And how the previous day, how the previous session delivered helps you determine what can be expected going into the New York session. Again, nothing in here is telling me that we're ready to be bullish yet. Nothing is being taken out really. It's being traded to and through and then back below again. And we're kind of stuck. If you take this high to that low, equilibrium is somewhere in this area. We're accumulating inside equilibrium. It's also accumulating inside this 5-minute breaker, right? And again, the most sensitive areas we want to see price hold in is right there. And it is. We're back down close to the low of it again. We got low, high. If it breaks that low, that's another breaker inside of this breaker, which is inside this breaker. Right? If you can see that, this is what ICT means by the fractal nature and price. Things are happening within each other. The larger one has smaller ones working inside of it. And then the smaller one that's working inside of the larger one also many times has its own picture too as you drop down even further. Right? That skill set, by the way, understanding that in a comfortable way, being able to cycle through that mindset at a rapid rate in the heat of the moment, that's one of those things that requires experience, a little bit more experience than people are comfortable with. It's just like an Army veteran versus someone that just got out of boot camp. Someone that's been in war numerous times, they're going to have a different way of thinking. They'll know what to do versus someone that's brand new, who's going to have massive anxiety, doesn't know what to do, doesn't know what to expect, doesn't know even if they could be confident about surviving. Right? It's the same thing in this. People that have a good amount of experience, they're war hardened because they've went to battle numerous times and they understand their enemy that they're trying to take money from, right? Because they've just been here. They've swam in these waters before. There's no replacement for that specific element. I try my best to give you guys insight on in that realm of things, just based on the experience that I have. But hopefully it helps. I think it has, from what you guys have told me. But yeah, there's no replacement for that. Let me see. Okay, didn't miss any questions. So yeah, again, this is all still holding. My opinion is not off the table for shorts. We still have a little more to go. I'd like to see if we can get down through that. Again, we got that little breaker in there. If we go to the 1 minute, got a breaker here. This low, high, creating a lower low. If it returns back into that, that's another breaker, possibly another opportunity to be a part of the short. At this moment, it's not moving. It's hanging around too long. So say you were observing this breaker. If you took that breaker and, didn't, let me see. Yeah, if you took that breaker and you didn't take profit using 20 to 30 points because of the range that we're in, we're not in a trending environment. We're stuck. You should not be aiming for massive home runs. But if you took this and you didn't take profit there, this hang around is something I personally wouldn't like. I don't like price to hang around for like 20 minutes, right? Like we want instant feedback, at least within the first 10 minutes of the execution. We want to see life in the movement. So in something like this, if an execution was engaged, if I didn't take profit, which I would have, but if I didn't, I would have, more than likely closed the position, unless there was something on, one of the other indices that maybe supported it, like maybe the S&P was declining aggressively. This right here is just another reason why I would close the stop. I would just save the stop. If I did engage something like that. We have everything going higher here. So that is something that kind of goes against the likelihood of this having a smooth run lower, if it goes lower at all. The S&P is like the big brother that will lead the pack. If it's going higher and the other two are not, or they're starting to, but they're going slow, but the S&P is raging higher, say dollars going lower, eventually these will catch up. The ones that are falling behind the S&P. The S&P, if it's consolidated, that can create problems too. If the Dow and the Nasdaq are rallying, or at least looking like they're going to rally, but the S&P is sideways, not doing anything, that's going to have an effect, because the S&P has 500 stocks. It's more weighted, more heavyweight than the Nasdaq and the S&P, or the Nasdaq and the Dow. But that's why the Nasdaq and the Dow are faster, because there's less stocks. S&P has 500, the Nasdaq has 100, and the US 30 has 30, right? Or the Dow has 30. That's why it's called US 30, US 100, US 500. The Nasdaq 100, S&P 500. Does Dow Jones have a 30 on it? No, the futures index doesn't even have the number. But we all know. That's why the Dow does what the hell it wants to do most of the time. Yeah, this is not something I would be willing to touch at this current moment. I would like to see a breakdown below this. We may get that now. It's kind of moving outside the macro. We may hang around in this up to the macro, or 5 minutes before at 7:45. That'd be something that I wouldn't mind seeing. If we get displacement through this, that's very enticing for us to then try to target this. People are getting chopped up in here. You can imagine damage is being done. When price is held like this, after it was really, really fast, you can imagine how many accounts are being blown, how many hearts are being broken right now. But we're waiting for price to come to us, as we should. So yeah, I would take this. No, I would map this out. You can also see this high, low, failure swing in the larger swing, high, low, failure swing, a breakdown below not only this breaker candle here, but also below this. This down candle here would be enough. You can also use this too as a reference for resistance if it trades back into it, supporting the run below the lows here. But again, the risk right now, we are in a consolidation. Do not try to blow your account right now. Do not demand too much. Everything should be half risk because it's very slow, right? It's not clearly in a rapid, movement. It's just stalling out because of the fast London. That may change closer to this macro. So we got to keep our eyes out with how it breaks down below this. So yeah, this is what I'm going to continue to look at. Nothing's really changed. Our analysis initially from the start of the day, it's carried us all the way up to this point. We've just had some, back and forth in here, but nothing's changed. You see the low of the regular trading hours gap? That's what this yellow box is. It's refusing to even get back up to the 50%. If we can't even get price to get to the 50%, that alone is bearish, right? If it's trading below at a discount relative to the previous close, that's what the regular trading hours gap is, and it trades up into it, but then can't even touch the midpoint, many times that's a heavy signal. And then you got the higher time frame signals too, right? Like I said earlier, the wick, the rejection from here, the other wick, the failure to even attempt to get through that, coupled with the area down here, possible bullish dollar too, which I called for on Sunday. Definitely got the currencies. We got high, low, high. 50% of that range, sell side, buy side, 50% of that shouldn't even be traded to. So what does that mean? This gap shouldn't even be traded to. And we should see retracements lead to change in state that then target external range liquidity again, internal to external. That's the line in the sand. You can use this on every asset, every time frame, all the time. And over time, you see how effective and helpful it is for clarity's sake. But yeah, again, there's nothing in here that I'm too excited about. I am keeping my eyes on this. If it breaks down below that, a return back into that, may offer something. And the aim would be to finish off the gap down there. But at the moment, right, it could just very well hold this and stay in a gridlock like this. We are part of a larger consolidation. We are still part of, like I said, an inside day that creates low probability. We assumed that earlier because it's an inside day. If you guys recall, I was talking about that the last hour. So there's nothing too concerned about. But nonetheless, even if nothing happens, we've already called out multiple setups. Called out this one, talked about this one. At this point, only one student was able to take that. DJ is part of my private group. Did talk about this one. If you didn't want to go to the lower time frame, you could use the mitigation block there, right? High, low, failure swing, breakdown. That's what this one was, that initial move. Secondary return, because it closed below that so aggressively, it just shows that that's a wick trading through it. If you took all the wicks off, you wouldn't see higher highs here, right? Relative to these different highs. You'd see a higher high here and a lower high here relative to that. Same thing here. Same thing here. So did we just get, okay, we're attempting to get back above the first presented for value gap here. Yeah, if we can't get something to clearly pop off the chart at us, I wanted to see this. we may not get that. It may not offer it. Again, we are seeing the bodies of the candles close below this high here. So if that continues and say it displaces through that low, it still could be viable. And this back and forth here, when it trades into that, could potentially, if we are going to go bearish down to this, which is what I'd like to see, this could end up potentially being used as a, like I said, a mitigation block too. High, low, failure swing, breakdown. It could be a balanced price range as well. And that's inside of this breaker too from the 5-minute. So as long as this stays intact and we don't break above this, we will still be able to see potential ideas being offered to the downside. For now, though, no matter what you do inside this consolidation, you're going to be chopped up. So yeah, hopefully everything has made sense so far. We'll see if there's one more opportunity that can be offered to us. So we've got this high, low. If it creates a higher high here, this again may be showing us that sentiment, at least for right now, may adjust and shift from sell side delivery, targeting the sell side liquidity, to then trying to seek this in a seek and destroy type of fashion. And then again, if this ends up really slamming through this, say it breaks this high to that low, right, the mitigation block 50% level, then we got these relative equal highs up here. And it could be classified as second stage distribution up here for a market maker buy model. And that perspective is how we would then quickly be able to shift and be flexible and then start to seek buy side liquidity. And then you also got a gap up here too. This gap though, going back to what I was saying about the balanced price range idea, huge gap, well, a reasonably sized gap, shift below this low. But think about it. We have low, high, lower low. So buy side, sell side. So look where price stopped, right at the open piece right there. But it left all of this open up to the 50%. It must be what we're saying, right? It must be valid what we're saying about the balanced price range idea and how helpful it is. It stopped like a brick wall to the tick. It's not random. We do this and point out this stuff all the time, right? So you could see it all throughout price. And I encourage you guys that maybe have just heard about this the first time or haven't did a deep study on this when it comes to balanced price ranges and how they form. I encourage you to get a massive amount of back-tested examples of this being the case. Convince yourself by seeing how many times this occurs like this. Or if there's like a large wick, it has the same dynamic as, this movement higher like this slowly, followed by displacement. It could just simply have a wick that shoots down through before the displacement like this happens. That'll be used in a similar capacity. And that's when you can expect that a fair value gap will be left open. Huge leap forward. And those of you that stuck with me this long, I mean, this video is packed with so much value that I'm sure 90% of people are going to discount. But then they're going to still wonder, how does he do this every week? How does he just continuously do this all the time? It's most of the time the things that are discounted that can get you to where you're trying to go. But hey, you can't save everyone, right? But yeah, again, for those of you that do see how powerful this could be, and have obviously been with me for a while, if you haven't done the studies or just like the simple back test of some of the things that we talked about, highly encourage you to do so. So yeah, this order block here will become significant in my eyes if it gets displacement through it. That would be an early signal that, first of all, it's going to be respecting the first presented here, refusing to go beyond that to the downside. And then that'll be a really solid change in state. So you see how the displacement happened now? So let's see if that can lead us to potential aggressive delivery up above this. If this was to fail, we shouldn't get beyond the 50% here. if that is what's going to happen. So this should be a solid reaction. That's a strong movement above that. So if it's bullish, it's going to tap into that. We shouldn't spend too much time in here, right? It should just like vault higher if that's going to be a trustworthy order block. Again, we are in a range, so we have to be very flexible. We have to consider this is essentially a 50-50 example, right? When you're stuck in a range, nobody knows what it's going to do. Best thing you can do is go back to what the higher time frame is showing you, and then couple that with some of the close equal highs or relative equal lows that are present, and then just try to wait, let price come to you, do things like this, and then watch and see if this is respected here. Say this next candle opens up also and then breaks this high. This can be looked at as a potential propulsion block if it was to close above this on this candle. We have an order block inside of an order block. So 50% of this, after it gets above that, should not be traded through. And it should just continue to push us through. We're above the first presented for value gap. The breaker in this case, once we get up above this upper area, is now being invalidated, heavily contested, not sensitive like it was earlier like this. So you'd have to just continue to adjust, right? And see, okay, well, we got equal highs up here. Near term, it could tag that. At the same time, it could just take highs and then bang around again as well because we're in consolidation. That's the risk in low probability, high resistance environment, right? That's basically what we're in right now. High resistance, low probability. So yeah, depending on what happens in the next 5 minutes, that's going to determine whether, at least for me, there's going to be any further action that could be offered. So yeah, let's see how this is going to deliver here. So between this high of this candle here and the first presented fair value gap, that is significant for us. If it's going to be trustworthy to go higher, midpoint here should not be traded through. This fair value gap should now have a very sensitive reaction, causing a secondary second opportunity for a change in state of delivery here to the buy side. And if it doesn't, and we get back down below it, we have a low, high, lower low that'll be created, and it's also a bearish order block, right? Because the breaker hasn't been fully turned off on that 5 minute, this breaker here now, right? We just invalidated the whole order block. So this order block, bullish, is now also, it could be used to go the other way now as an inverse view, because it's also a breaker and a bearish order block. We're now below this. Seems like we're picking up energetically through that. So depending on a return back into this, that would determine whether I would have even an opportunity to consider. And I'm just now going to snap back into, okay, we still have this gap down here and we got relative equal lows. It's just been heavy manipulation. This high closed below this. We haven't fully changed the overall delivery. Hasn't fully turned off this 5 minute framework, that being the 5 minute bearish breaker. It's just hung around and accumulated. So now I want to see if we can get a sensitive response as a result of this change in state of delivery. There it is. So yeah, this should be sensitive. We should not come back to this order, the order block midpoint, or this fair value gap. It should leave it widely available. It could trade a little bit into it, but preferably it doesn't if I'm going to try to trust this as a reasonable, worthwhile execution. We should get this to be left open. Stops should be safe above the first presented fair value gap. But because it's consolidation like this, and it could have the opportunity to bang around, if I took an execution, it would be half risk or less. It's not certain that it's going to take this. It's not certain that it's going to take this because we're in the middle of the range. So there's that low probability behavior. So that would have resulted in complete turnoff. Now breaking out above this high puts this in perfect crosshair. And notice how it spent so much time and it's rapidly moving. That shows you all of this was manipulation to accumulate liquidity on both sides. And now it basically tagged that. That was a beautiful stop, fake out, beautiful fake out, respecting the high up here, respecting this. You notice how it didn't quite get above that? So it didn't quite confirm from the lens of smart money and ICT's overall validation process. It didn't quite prove it that it wanted to go. Sent it down one more time, swept out the lows, and then rapidly ran through. So this right here is pretty telling. It seems like they're probably going to leave this. Again, we still have the behavior of this being seek and destroy, just going sideways, not any follow through whatsoever. It had somewhat follow through for the shorts, but then it failed, right? Offered, the ideas that we talked about. And now we're pulling back aggressively after taking the stop here. So we'll see how this is going to be treated in here. We turned off the bearish breaker. So now this, if it's going to be bullish, should be able to be respected as a bullish breaker. And then this wick here should not really have any issue getting traded through, right, if it's going to be bullish. Given the fact that it's an inside day and we're still kind of in the middle of the range, I want to see a little bit more if I'm going to take a buy. It may very well send it up from here to target these equal highs up here. May very well do that. Given the overall condition and what price has done, I'm not going to allow for it to be so simple like that. I'm going to require a little bit more evidence. Like this wick here, if we can get above that wick, you could then treat that as a balanced price range. This right here, if I'm not mistaken, yeah, it's a bullish breaker in itself. So the bearish breaker, low, high, lower low, is also part of a high, low, higher high now. So that's actually a bullish breaker there. So that's a very dynamic move. So shorts are definitely not on the table for the moment. It's going to have to really slam down again. But again, if it does that, you could just see the condition, like I said. So, given the overall condition, there was one trade in there that we pointed out that didn't work, right? Possible trade. I didn't take it just because of the situation, and we engaged earlier. If you did engage earlier, you should not have even considered anything that I say beyond the entry that you took and were successful on. 1 to 2 trades a day. That's it. If you cannot accept that, you're not going to really be able to get help. Nothing that's said is going to work because you'll master one part, but the other part in terms of the management of your trading, how much you're trading, and if you're over leveraging as well, nothing you learn, even if I'm here showing the market, continuously calling it every single day, every hour even, because we could do that too. It wouldn't matter though. It doesn't matter if I have 100% accuracy. You're not going to be able to benefit because you have a plague, that needs to be removed, which is not being content with enough and not being able to control yourself in the amount of trades you're taking or the amount of risk you're putting on. You'll make money and lose money, make money and lose money nonstop. And you'll feel like you're spinning your wheels. When in reality, it's just small things. If you can call the market and you can find setups, but you just find yourself over trading and over leveraging, and it eats away at things that you succeed on. If you just simply remove that, many times students that come to me, all they got to do is do that. Especially if they have over 3 to 5 years experience. Many times that's the key. That's the key to you getting out of this nonsense. Something to consider. Yes. So think about those things, you guys. Before I go, and we bring this to a close, I want to point this out. So we have this 4-hour here. Okay, so this is a 4-hour bullish order block. So I want you guys to really pay close attention to that, because if this run above these highs here, ends up, leading to, this being a retracement that then leads to the high being taken again. If this is taken out, that'll make me feel like that is definitely something to consider, especially if dollar ends up collapsing. It's tried to get some strength, but for since Trump said that there's a ceasefire and he's trying to kind of find a way out, things have obviously gotten a little bit more certain. I guess as much as they can be during wartime, right? But if this here, if we have a change in state here from this specific 4-hour candle that we're inside of since 7 a.m., you notice the 4-hour failure to close below the 50% of that wick. You notice how this delivery is basically at the 50%. The closure of these bodies of the candles is at 50%. That's significant. So if this can be followed by a displacement above this high here, the next 4-hour candle, if this one gets above it, may end up resulting in a wick into that ends up leading us to a displacement targeting this high again. That could be a very, very easy possibility if we can get up here. And of course, we're inside of two different scenarios as well, right? First of all, we're inside of a range, low, high, we're at the 50%. That's never a fun thing to trade when you're in equilibrium, because all the time when you're consolidating, most times it's at a higher time frame equilibrium price point, or you're stuck in between new week opening gaps or multiple. The price is just refusing to bounce out of. And many times that happens with certain news events, geopolitical events, Mondays, Fridays, days when there's no news, right? A lot of times that happens around those times when it comes to the consolidation. But if we can get price to come up beyond this, we'll be able to then reasonably consider the high up here. If this 4-hour candle closes below this, it looks like, sheesh, pretty vicious. It's a pretty vicious condition. So yeah, depending on what this is doing, going into the next 4-hour candle or how this 4-hour candle closes, this is not worth trading at all. You see how wild it is? Just the observations from earlier, and we found little scalps here and there. Just the fact that it can't move and it's just back and forth, clearly showing seek and destroy, should make you consider not taking a trade. You can consider studying and letting price come to you, seeing what's going to unfold. But it's super vicious. It's not encouraging for you to take a trade, because no matter what opinion you had, you could be wrong. This is pretty interesting how they sent it down specifically to that low, swept it. If this leads to this change in state, again, that's putting this back into the crosshairs. This high up here is the high of this 4-hour order block. If it can get up there, again, the next 4-hour candle may result in another push higher off the heels of this being a bullish order block that finally gets triggered in once it takes the high. And then we'll finally be out of this, holding sideways range that's basically occurred from overnight. It's seek and destroy. Look, buy side taken, sell side taken here on the higher time frame. And then now we're back in the middle from the high extreme to the low extreme. That tells you the condition in itself is low probability. Just that alone, aside from all the other things with intermarket relationships, what kind of news is happening, just the characteristics of price. It's at equilibrium too, with seek and destroy clearly being identified. So it's low probability. So what does that mean? Follow through is going to be less. It's going to be very consolidated. It's going to sweep buy side, sweep sell side, come right back to the middle of the range. So no matter what you do, you're going to feel like you can't get a hold of things. So in that case, you wait. In this case, I'm going to encourage you guys before we go here. I'm going to encourage you to wait, see what happens with this. Watch this upper portion here of this order block. The characteristics that it's showing here, we are sweeping this low and it's now rapidly going up. it's showing some life that we are going to, in fact, get up here at some point. It may save it for PM session because now we're so deep into AM session. We are inside of a macro right now. So, maybe something happens. Go to that 1 minute. We have an inversion here. That inversion is inside of the bullish order block. It's not yet completed, but once it gets above that, it may be something to observe and see how it's used, whether it gets us up here or not. The only way that I personally will look to even consider a short, if I was going to continue to trade today, is if we were to get back down below this low. We got relative equal lows here. Maybe it uses this fair value gap to target that. That's something that could be considered too. We are still part of the mitigation block on that upper framework. We are still inside this bearish order block here. We're not quite through 50%. It just attempted to get to 50%, which was here. So yeah, if that stays intact and we get down below this, again, we look to target this. Now, if you want to think about it from the other side, again, for the bullishness, say this respects, say it gets continuously above this high to that low, leaving it as a bullish breaker, which it very well could. Once it takes out this high to that low should be looked at as a balanced price range. And assuming that it is going to get up here, it should not come back to the 50%. This fair value gap, once traded beyond through to the buy side, should not be traded through. If it does get traded through, that turns off the interest for a buy or for any like bullish indication. And if neither of these things get taken out, like say this doesn't get swept, say this doesn't get swept, and we just stay in here, or if it sweeps that and comes back down deeply into the range, or if it sweeps this and then comes back into the range, again, there's already enough for us to not think trading is going to be super exciting. There's already enough indications from what we've talked about today. Of course, outside of the ideas that we shared that worked out. But there's enough at this moment to say, okay, I might as well just wait. Let me save the gunpowder for tomorrow. So again, hopefully you guys got a lot of value from today. I try to get as detailed as possible. Some people don't like it. Some people do. But the ones that stick around obviously get a lot of value. They see the progress. I know how to trade. I don't got nothing to prove, yet I still prove it every single week. But yeah, hopefully you guys got value. If you have any questions, obviously let me know. If you're new here, don't forget to subscribe to the channel. Hopefully I explain things in a organized way for you guys. Hopefully you feel that's the case. If you guys do have any questions, you can always hit me up in my DMs on Instagram. You could throw things in the comments. I always answer every comment as well here on YouTube or on Instagram. I do have an X profile, so definitely go search up my X if you want to follow me there. I'm going to start posting a lot of psychology. It's kind of what I do on my Instagram. It's the whole purpose. And then, of course, this is the activity of trading and deeper education and whatnot. Each of my social medias has a purpose. Like Instagram is some highlights from time to time, psychological things, all the different things that I've studied with ICT's concepts and his Twitter spaces and, whatever else I've picked up, I try to share there. So that's that. And then my Twitter, I'm going to be a lot more specific. Still trying to figure out exactly what I want to do with it, but if you don't follow me there, definitely go do that. And then, of course, here on YouTube, if you stick around, you guys will get a lot of value too. So, yeah, with that being said, let me know some of your thoughts in the comments. If you liked the video today, if you didn't like it, if there's something that you think we can improve on to give you a better experience. If there's any topics you'd like me to make a video on, I'd be more than happy to do so. And yeah, don't forget to like the video, subscribe to the channel. If you have anyone that you think can benefit from a community like this, definitely spread the word. I'm trying to pass the blessing I've been given along. So if you feel in some ways, this community is a blessing to you as well, or getting you value that you're maybe not getting from anywhere else, definitely spread the word. Help me share this blessing with everyone, and you guys are part of that blessing too. A lot of you guys are very helpful to new students that are here that ask questions. I know some of you guys have went back and forth. I've heard some of you guys that are here on this, that are with me here on the YouTube channel live. Some people ask you guys questions, either about the mentorship or, the private group, or just simply some of the stuff that we've talked about that you chimed in on a live call. So I greatly appreciate you helping me in that. And I'm glad that you guys feel confident enough to do that, so just it helps me see that what we are doing here is definitely effective, let alone from the results and testimonials. So yeah, with that being said, I won't keep you guys much longer. God bless you. Don't forget to like the video, subscribe to the channel. Let me know if you need anything. And we'll be live again here on YouTube on Sunday. And those of you in my private group, I'll see you guys bright and early tomorrow, as always, and every day after. Okay? So yeah, God bless you guys. Thanks again for your time. Hopefully you got value, and I will see you beautiful people on the next one.